All right, thank you for joining us today for our webinar, Are Your Amazon Orders Even Profitable? Our agenda today will be going over a brief introduction into profit problems, seeing profits, expenses. We'll have some tips for you, and then we'll go into a Q&A. So a little brief introduction into Webgility. We've worked with thousands of Amazon sellers. We're a member of Amazon's Developer Council. We were founded by an Amazon veteran, and we're the #1 automation software for Amazon sellers on QuickBooks and NetSuite. And today I'd like to introduce our Amazon expert, Mr. Kevin Dragoo. He is our senior product manager at Webgility. He has over 10 years experience, and he's worked in key verticals including e-commerce, retail, manufacturing, and distribution. Thank you, Kevin.
Thank you, Sarah. So we're going to start off here with a poll for everybody. As we are talking about profit, we really want to understand what specific profit metric you are interested in. So let's take a look at that. Okay, I've got a few responses in. That's good. All right, we're going to close the poll here. Just a few seconds. All right, we're going to close that poll. Okay, so based on that, we actually have 62% of people are looking at a profit per order, and 38% are looking at profit per SKU. Those are actually great results and ones that were right in line with what our expectations are. So thank you for that. Okay, so back on to our presentation. That's the poll question we had. We're going to take a look at the profit problems that we really see out there. What are the problems that you normally experience? What are the problems that are often out there in the industry? So one of the key ones is just lack of visibility into the profit. So profits have just can have highly complex algorithms into getting the profits. They are the revenue and the expenses. Revenue's not too hard to get, but it's really the expenses that can be all over the place, and trying to gather them up into an easily digestible format is what really limits the visibility into your profits. So for instance, there is an overemphasis on revenue. There are a lot of key sales metrics that are all about revenue, which is really good for the sales department. But if you're looking from an overall company or business perspective, if you have too much emphasis on revenue, you might not notice that your expenses are rising even possibly faster than your revenues rising. So your profits are declining and possibly even getting close to or are in the negative. So you really want to make sure that while you have some focus on the revenue, you don't overemphasize that. There are lots of hidden fees and changing fees. This is especially true in the Amazon marketplace and in the Amazon world, and even more so if you get into the wonderful world of FBA. So there are obviously some upfront costs, and you'll see those, and Amazon will present those. What they don't necessarily talk about, or what they have in the fine print, are a couple of items in there. One is some of them are variable, and two, they can change those fees at any time. So you really want to make sure that you have those fees, you have information about them, and you are tracking them as much as you can within the reconciliation period. There are also returns. Returns can often be a black hole within Amazon. And again, that's even more true when you're doing FBA. So you really want to understand what is going on in the returns. Is Amazon just tossing those returns? Or are they putting them back in inventory? Are they doing their due diligence with your merchandise? And how are you ensuring that they are making the right decisions on your behalf? So ensuring that you track those appropriately, and you track the expenses that you are incurring on those returns. And then, of course, as we all know, with Amazon, you don't have any real-time financials. They you only get paid every 14 days. There's that wonderful 14-day reconciliation period, so you don't understand what your fees are, what your expenses are, what they truly are, until you get that reconciliation report from Amazon. So you could actually be losing money based on fees, or they could have increased their fees. And again, you have been increasing your expenses that you're not aware of, and that could be happening for 14 days before you really understand it. There's also a lot of the data is scattered across the entire ecosystem of your commerce business. So that is both brick and mortar and in e-commerce. So your data can come from multiple sources. Obviously, a lot of fees come from Amazon. If you're doing fulfillment by merchant, the orders and the revenue can come from another shopping cart. You could have your shipping costs coming from stamps or FedEx or ShipStation or Shipping Easy, a number of different sources. You can have your payment processor fees coming in. So all of this is really a huge ecosystem of the sources to really make sure that this works. You have to pull all of that information in so you can have a holistic view of all of your data, holistic view of all the expenses that are coming in and everybody who's charging you. And then, of course, we have growing competition and thin margins. One of the obvious big competitors is Amazon. So especially if they start private labeling in your industry, then that just really makes it hard to compete. And with over 2 million sellers in 100+ countries, you're already competing with thin margins. And when Amazon fees are about a third of the sale price of the item, that just makes it even more difficult to ensure that your thin margins are at least still in the positive and making sure that your company is on a profitable trajectory. And if you're manually still doing your accounting, and if you are a very small business and don't have a contracted or full-time accountant, it's pretty easy to make some accounting mistakes in here. So you can lose track of the expenses. If it's a manual process, you can, especially if you don't do it multiple times a day or at least once a day, if you are a day late in tracking your expenses, or you have missed logging one of your transactions, your memory, even over the course of 24 hours, you lose a pretty significant portion of what you thought you would be retaining. So there would be a lot of backtracking to ensure that you have the exact information that you need to for accurate accounting. There's also cost allocation. There are a bunch of different cost buckets that you have, or GL accounts that you could be able to put things in. So properly putting those allocations in the correct placement really ensures that you have the right accounting structure for your expenses and fees. And then if you don't do the cost allocation correctly, and if you have lost track of your expenses and transactions, you're going to have miscalculations in there. So there can be some very, very big mistakes, which of course goes into you not having the right information to make the right decisions. Okay, so we have a lot of information as to what the common mistakes are, common problems are into understanding your profitability. Let's take a look at the expenses that are across everybody. So we're going to start off with expenses with a poll question. So we're going to ask, which expenses are you most concerned with reducing right now? Obviously, every company has their own set of expenses, and there are some that are most prominent for you to reduce. So I'm going to go ahead and launch that poll. Give you about a minute to bring this in here. We've got some pretty good competition going on. And we can see some of the numbers evening out. That's good. Nobody has selected other. That's also really good. All right, and we're going to close that poll. let's take a look at the results. So most people are concerned with shipping and reducing the shipping costs. That can obviously be a pretty big factor, and we'll touch on that in a little bit. Product costs, of course, that really deals with the profitability. So if your product costs are too high, if you don't have the right vendors or manufacturing process, then your product costs can go higher than your expectations are if you're not working on a volume kind of business. And of course, that eats into your margin. Some marketing aspects and inventory storage. Inventory storage we'll also talk about, and has a pretty big impact on your profitability. Okay, let's dive deeper into each of those. Okay. So the number of expenses is pretty overwhelming, especially if you're looking at the area of Amazon. So of course you have the cost of goods sold, the COGS, which also comes into the cost of the product. That usually comes from your accounting software, so you can pull that from NetSuite or QuickBooks. But you have to accurately calculate that. You have to look at the sample products that are coming in. You have to look at the fees that are coming in, like the Amazon fees, the storage fees. Like again, if you're doing FBA, if you're doing what the taxes are, of course, they should not be tracked as an expense per se, as they should be a straight through. But it really depends on how your accounting is set up. The shipping fees, as we talked about. So there's a lot of different fees and a lot of different expenses that you really have to keep track of. So you have one source of revenue likely, and that is your order revenue, and that's a nice line item. And then you have all the other fees and things that really come into what the profitability is of that. So let's take a look more about Amazon specific fees. So the most common fees, we've got the monthly subscription fees. Of course, that's $40 a month for the professional plan. You can do an individual plan and avoid the monthly subscription fees. But if you're selling 40 items per month, then you've hit the same price as the monthly subscription fee. So most everybody who is on Amazon, except for the first few months, are going to be doing the subscription professional plan. You of course have a per item fee that they are upfront about, usually on one of the first pages, and then they can change the fee whenever they want to and not necessarily tell you, or you might not be aware of when they change the fees. Referral fees, which can change from 6 to 45%, they're variable. And then you have the closing fees, so you've got the listing fees. And then if you get into multi-channel, if you're selling on Amazon and say Shopify with FBA, then you really, those fees almost go exponential. They always increase, not just on a per item fee or a, each fee is not necessarily increased linearly, but they can be exponential. And not have any correlation to the fees that you get directly from Amazon. The FBA fees can pile up. You have the fulfillment fees per unit, the pick pack, the storage fees, you have the labeling fees, and it really have to be careful on these fees, because as much as we all have a love-hate relationship with Amazon, they are not necessarily known for their accuracy in FBA fees. So you have to take a look at that and understand what fees they're charging you, and understand, are they consistent across your products? Are they, have they identified the right metrics or the right size of your product? So the width and the height and the length of your products, the volume, are they charging you correctly based on the weight? So you really have to be cognizant of what those are, what they're charging you, and keep them on their toes as to what they should and should not be doing to ensure you are maximizing your profits and limiting your expenses. So you want to be really careful that you're not overcharged, because you may be charged incorrectly. A few tips on shipping and fulfillment costs. So tweak your packaging. Amazon has standard size versus oversized. So we have the information here as to what would be considered a standard size box. If there's oversized, and they increase those fees. As I mentioned, Amazon can change the fulfillment fees at any time. There are a few other items that you can consider. So consider Amazon's partnered carrier program. You can consider shipping yourself if you have the right inventory space, if you have the right inventory type and the inventory space, or you have the means to obtain that inventory space so that you can ship yourself. That can help with that. You can negotiate with your shipping carrier, so pit them against each other if you need to. If you have enough volume, then work FedEx and UPS and USPS and all of them together and really negotiate your own personal shipping rates directly with them. Or if it's cheaper, if you don't have the space for your own inventory, or if getting that space is too much of an expense, you can utilize FBA. And if you're utilizing FBA, then you can have your supplier ship directly to FBA. And so you're not having to have a middleman, have you yourself be a middleman and increase those shipping costs. Keep in mind with the inventory fees, if you do use FBA, that your FBA storage fees are changing. They're constantly changing. So we have a lot of metrics in our product, and I'm sure whatever product you use, I don't care if it's Excel, you can take a look at those storage fees and make sure that there's not a jump, or you can see if there's a trend analysis on those shipping fees. You want to make sure they are consistent, or if there is a trend and the trend is appropriate or at least expected, then you can prepare for that trend. You can forecast your inventory. Again, you can do a trend analysis on that. We can help with that in our product. And as you grow, we can start using artificial intelligence to really monitor your inventory, take a look at seasonality for your inventory products, take a look at whether it could be fashion trends, it could be any number of items that make your inventory cyclical throughout the life cycle of that particular product. So you can do some analysis on that for yourself. A trend analysis is not going to be very accurate, so you want to really use some type of machine learning, a more intelligent forecasting item with the more products you have and the more seasonality or cyclical product style or categories that you have. You may want to consider a price cut for some of the items. You may want to consider discontinuing inventory that isn't selling, especially if you're incurring fees on them and there's just not, and that inventory is not moving, then really you're just paying fees on inventory to sit in Amazon's warehouse. So pull them back and take care of them yourself, or do a price cut and get rid of them, even depending on the costs of those products. Returns, as I mentioned, returns is a black hole within FBA. So really, if you want to be able to negotiate with your manufacturer for returns or defective items, see what the options are with that particular manufacturer. And then again, you want to automate your expense tracking. So see what the returns are coming in. You always get charged for that. You get charged for the shipping. You want to make sure that Amazon is doing the right action for the returns that are coming in. I mean, you want to make sure that that a return that comes in, first of all, is the package, is the item actually returned, or is it just a package? If the item is returned, is it the right item? Is it the right color? Is it the right variation of that item? Is that item in working order, or is it not in working order? So can it be returned to inventory? If it's not in working order, is it fixable, or can you, is that something that is under warranty by the manufacturer if you are the distributor and not the manufacturer? So there's a lot of different things in there that, you know, Amazon tries to make a pretty quick decision and take care of that product, and you need to be aware of what is happening with that inventory and how you can and what your responsibility is with that inventory in regards to what Amazon is doing with it. Okay, we've talked about some profit problems, common profit problems. We've talked about expenses and the variations of expenses that you have. Now, if once we have the revenue and once we have accounted for all of the profits, now we need to be able to see how what those profits are. How can you see those profits within your company? So first of all, as I mentioned, there's a lot of different sources for the data. So you need to be able to bring that all into a single point of view. So you want to consolidate the financial data. A lot of that can happen and should happen in your accounting, but that might actually not give you a comprehensive view depending on how your accounting is set up. So fees might be all lumped together in just fees. So you might not understand what is going on with the individual fee. Are your FBA fees going up, or is FBA fine and one of your other fees going up? You want to understand the nuances of your business so you can make the more intelligent decisions as to what's going on, make more intelligent decisions about your products, your product pricing, the seasonality of your products, the sourcing, the whole supply chain that you have within your company, and again, consolidate that information and see an exact view of what's going on, what's profitable, why is it profitable, or at worst case, why is it not profitable, and what can you do about it. And we can focus in here. This is a screenshot from our product WebGility. You can see this at an order level profitability, which the majority of you were interested in. And second was item level profitability, which we can also do too. So we have information here. We can see the tabs of the specific order, what the history was of that order. You can see a list of all the fees, but then here is essentially a P&L statement for this order. So what is your revenue minus any discounts that you have? So the order total, what were your expenses, and were they fees, or what types of fees were they? What were the total fees? And then you can see the net profit or loss specific to this order. So you can quickly see, was this order profitable? Why was it profitable? Or again, worst case, why was it not profitable? And if it wasn't, where was that profit eaten up? Was it because you didn't have the right sell price, or is there a higher fee than you expected? And drill down into this information so that you can again make the right, the intelligent response to the non-profitable products and items in your inventory. Okay, and then last but not least, or this isn't last actually, we can see the revenue and expenses. You can see it, here's a P&L statement from QuickBooks. This gives you a little bit more detail as to some expenses that we don't track. For instance, this could be soft expenses or labor, or some of those items that are not directly related to a product or to an order. So that gives you a good overview of your overall company status, and then WebGility really drills into your orders and your products and what is going on. What are your most profitable products? Why are they profitable? How profitable are they from an either dollar perspective or a margin perspective? What are the top regions for selling your products? You can see the trend analysis for your expenses, for the product sales. So we have all of this information. Of course, you can drill down into it based on certain aspects of this. You can see what it is over a certain time period, and again, get a good analysis, quick, digestible view of the right products that you should be focusing on within your company. And then, of course, as we mentioned, just discontinue your unprofitable products. If it's not making you money, then consider discontinuing it. Now, there might be some that is a loss leader type product, or they just might, they would increase the sales of one of your primary products that is highly profitable. That does happen. You have to make those business decisions, but at least you are informed of which ones are not profitable and what you can do about those. So here we have, in this example, Groomers Pro is a dog grooming business, and so they use WebGility at the product level to see what their profits are and to be able to cut the products that are not profitable for them. And then there's another company that we can't name that nearly doubled doubled its profit margin in less than a year by cutting dozens of products. So if you see the products that aren't making you money and there's not a strategic reason for holding those products, then get rid of them. Cut the fat out of your company and out of your business and really streamline what is making you the most money. All right. So all that, and just to talk about WebGility, we are automation for QuickBooks and NetSuite sellers. We're trusted by over 5,000 high growth sellers. We specialize in scale, speed, and accuracy, all of which we've touched on in this presentation. We deal very prominently with all of Amazon and a number of other marketplaces and sales channels. So Shopify or eBay or Magento or a number of those. So we take all that information, all of that disparate data, and bring it into WebGility. And because we have all that information flowing through our platform, we can help you make those intelligent decisions for your company. And we will now open it up for some Q&A. So we have on the line Colin, who is also one of our intelligent team members, and he will let me know what questions come in. Okay, so one of the questions that came in, does WebGility integrate with Xero? If not, any plans? Yes, WebGility has a number of plans that you can do, some online, some on-prem products, and our online product does integrate with Xero for accounting right now. So there are some other aspects with Xero that we don't integrate with. I believe there's some inventory items. I'm not 100% familiar with Xero, but yes, we do integrate with that. And if you were looking for more integration area of Xero or more integration connections with Xero, then we are happy to take a look at that with you and see what's best for your business. All right, so does WebGility actually do everything and manage everything that was in this webinar? So this webinar is supposed to be all encompassing of your Amazon orders, and so there are some items in there that we don't necessarily track and we don't necessarily deal with. So for instance, negotiating with your suppliers, we're not going to facilitate, and some of the more esoteric items we don't have in there. But for the most part, all of your profitability items, all of your expenses and fees that come in, your trend analysis, we do all of that within the WebGility product. Good question. Okay, how do you calculate eBay, specifically PayPal fees? So we do pull in all that information. So whatever the fees are, we take them directly from eBay. So it is actually a line item within eBay or a check/bill. So we pull that in with the eBay order and have that in as part of our P&L statements and pull that directly into your accounting system. It doesn't, so the response is eBay does not show PayPal fees. It does still come in as a line item. So we have that integration sorted out. Okay, you mentioned that Amazon charges a fee to the vendor when a customer returns an item on FBA. So I was under the impression that the shipping to the customer and returns are included in your FBA fees. That's a very good question. And based on my information, they do charge for those returns. But I can look again, and Colin has a lot more experience directly in those fees with Amazon. So Colin, if you want to jump on the line and respond to that, you can. Otherwise, I will get back to you and on that question.
Yeah, hey there.
Hey,
Hey,
Colin.
sorry, this is Colin here. Yeah, sorry, I'm in the chat as well, kind of answering questions here for you guys. And we will, as Kevin said, if we don't get to all of your questions right now, we'll definitely get back to you via email then, individually, if not as a group. So.
Okay, and one of them, the question was thanks, and so I'll say you're welcome. Okay. Can you do the shipping to FBA directly from the system to adjust for inventory and account for the ship to Amazon fees? Yes, we can do. We can use FBA to ship the products to our to the end customer. And there's a question about Microsoft Dynamics. That's a good question. We don't have any plans right now to integrate with Microsoft Dynamics. And we can do some manual import and export of the file data so we can aggregate that information and then do some manual import and export to Microsoft Dynamics, which is better than some other options out there. But a direct integration with Microsoft Dynamics API is not on the roadmap for this year. It is something we continue to evaluate, and we have lots of information about that once we decide to create that integration. So I will actually take that question and add you to one of the to the list of people who are interested in that, and that'll help us raise a priority for that. So thank you. Oh, so the FBA, shipping FBA, the question was to ship from the customer's warehouse or from your warehouse to FBA and adjust inventory and cost. So the experience with that right now is not as robust as we want because we have not pulled all the information in that we want from the FBA, and we are evaluating that right now to ensure that we have the right story for that. So I would expect that, and I will caveat this with timing expectations do change from a product perspective, but we are looking to do that within the next 2 months. Okay, do you recommend charging customers for the shipping when charging from us or charging a flat fee for shipping to recoup some cost? That really depends on your business model. And there's no such thing as free shipping. Even if you say it's free shipping and customers are becoming more aware of that. So they know that if you say it's free shipping, then it's just built into the cost. So really it's up to you. It can be a nice banner item to say that you have free shipping, but as I mentioned, customers becoming more aware as to what that, to the fact that there's no such thing as free shipping. And some of them, it really depends on your customer base. They would rather understand the full cost of the product that they're getting and see the shipping items as a separate line item to understand exactly how their money is being distributed for that order. But again, it really depends on your industry and your target market. These are excellent questions. Let's see, I think this is the final one that we have time for. How many and which marketplaces do you integrate with? Last count, it was 50, I think, 40 or 50 marketplaces and shopping carts. So we've got a pretty extensive list, and we're adding those on a pretty regular basis. Okay. If you have more questions, we're going to get back to you as we can for any questions that we didn't get to. I know there was a question like that last question about which ones we integrate with, and I'm not able to list out all of them right here, but so feel free to send us an email or give us a call, and we'd love to talk to you in more depth about your specific company and what your requirements and needs are, and how we can best help you in automating your company and giving you the most profit opportunity that you have. Okay, thank you very much and have a wonderful afternoon.